Welcome back to Insight. Joining us now is Caleb with Foster Financial. And Caleb, we're chatting about qualified charitable distributions. I got it down. Caleb, for those who don't know what that is or what we're talking about, how could you explain it?
Yeah, great question. It's essentially a tax strategy that we typically use that allows people to donate money from their IRA and not have to pay taxes on it. Okay, so I know taxes is kind of top of mind for people right now. They're getting their W-2s and their 1099s in the mail. You're making that stack on your, kitchen table or whatever it might be for the CPA. But I think a lot of people don't really realize that qualified charitable distributions are available to them. And so if somebody is over the age of 70 and a half and they have pre-tax funds in like an IRA or something like that, they should absolutely be leveraging QCDs. It could be a good strategy for them.
Interesting. Well, what are the benefits to this?
Yeah, good question. So essentially, when money typically comes out of an IRA, and most times, people absolutely have to start taking money out of the IRAs when they hit that required minimum distribution age. When that money comes out, it's always taxable as income, okay? And so if instead somebody donates that to a charity, and especially if they're already donating to a charity from like their checking account, it can be a way for them to reduce their taxes at the end of the year.
Which is always a good thing.
Yeah, absolutely.
Really, I think we're all starting to see that. So how does someone know if they qualify this or if they're able to go this route?
Yeah. So typically it's available to people as long as they're over the age of 70 and a half and they have those kind of pre-tax funds. And so I can kind of give you an example of, when this would help somebody. So, let's say there's a couple who turned 72 years old last year.
Okay.
And that means they had to start taking those required minimum distributions last year. If their RMDs were, roughly $10,000 at the end of the year, so right now they would actually have to pay taxes on that $10,000 that came out.
Yeah.
But let's say, they're charitable minded. Last year they donated $10,000 to their church just from their checking account because that's what they normally do. Those people would take the standard deduction at the end of the year, which means they really wouldn't get any tax benefit from donating that $10,000. And they would still have to pay taxes on the $10,000 that came out of their IRAs. And so if they're in the 22% tax bracket, they have to pay, $2,200 in federal taxes for the money that came out. So that's not leveraging QCDs. This year, on the other hand, if it's kind of the same scenario, but they do leverage QCDs, let's say they have that same $10,000 required minimum distribution between the two of them, and they actually donate that money directly from their IRAs to their church as opposed to doing it from their checking account. At the end of this year, they'll still be able to take that standard deduction, but that $10,000 that came out of their IRA is now no longer taxable. So they saved $2,200 this year, and over the next 10 years, that could be 20 grand that they save in taxes.
So it really depends on the year and how much you are giving. Is that correct? Okay.
Yeah, sure thing. I think if people are over the age of 70 and a half and they're donating out of their checking account, they should immediately kind of perk up and say, hey, QCDs might be a really good strategy for me.
And we asked what the benefit is, but are there any negative sides to this?
The QCDs, there are very, very few ways to get money out of an IRA tax-free, and QCDs are one of them. So it's certainly something to take advantage of.
Interesting. Very, very interesting. Caleb, it's Foster Financial. Like always, you guys come alongside of them. If they do have those questions, if they say that they do want to go this route, you guys are just a phone call away, aren't you?
Yeah, absolutely.
Awesome. Love that. Thank you, Caleb, for being here. And if you're interested in learning more about Foster Financial, talking to Caleb himself or Heather, all of the information is on your screen right now.